Naz has got a question. In Melbourne Metro, is it on our radar as a buy and hold for 10 to 15 years? Given the future population growth, do you see an opportunity in buying a $600,000 to $650,000 freestanding house? So it's a really good question. Whilst we have a long-term time perspective here, it doesn't mean that we still buy at the wrong time, right? Because we might be patient, we might come back in 6 or 12 months and buy at the same price or even slightly lower. What is the likelihood of growth in the next 6, 12, 18 months? Because even with a long-term time perspective, we can be a little bit fussy with when we buy. You know, I'd much prefer if we had 100 grand in our pocket today and we make the assessment that Melbourne's not going to be moving for the next 12 months. We go and spend that 100 grand buying somewhere else, generating a good return on that investment and bringing the profits back into Melbourne. Then we've had our cake and eat it too. We've had good returns in the next 12 to 18 months, and then we can position ourselves into the Melbourne market for the long-term growth. Okay? So this conversation is about, is there buying opportunity right now in Melbourne? And if it's still 6 or 12 months away, even though we have a long-term perspective, it's still not worth considering. We come back then and not force it. So let's dive into Melbourne. Okay, and I'm going to use, I'll go through a few LGAs in Melbourne using our suburb selection tool. This is obviously an internal tool here at Ripe House. Generally, we're not buying in the Melbourne market at the moment, so I'm not really revealing any suburbs, publicly that are meeting our criteria. And I'll load up this filtering for us to all see. Where's this dropped? All right, so this is our suburbs research tool. We've obviously got over 15,000 suburbs dialed into it. They are ranked from best to worst. We are looking at all the metrics that our algorithm, using machine learning, etc., is assessing to identify these very strong capital growth properties. The types of results that we are talking about with this algorithm, well, it's been operating now for almost a decade. In April, it generated 3.2% capital growth. In the last 3 months, 5.4%, and 2022, 16.2%. Okay, what does that mean? Well, we're filtering it in terms of the top 10% of opportunity. All right, so if every suburb in the country was ranked from best to worst, we're only focusing on the top 10% of opportunities. All right, so that's now filtered it down to 1,500 or so properties. And now I'm going to come in here, based on our question from Naz, and look at Melbourne. Now we can select individual local government areas if we'd like, and I'm going to leave it broad and open, and I'm going to select some max prices here of 700K and a min price of 550. So I know you've specified 600 to 650. I'm just going to go 50K either side of that, Naz, just so we can see, we might buy a different property in a certain location. So that's now filtered down to 19 suburbs. So in the entirety of Victoria, there are only 19 suburbs where our growth algorithm is in the acceptable range, right? That's our general expectation. Whenever we are looking to purchase properties with clients, we are looking for the top 10 percentile according to our score. When that box is ticked, from 2015 onwards, over many hundreds of millions of dollars worth of purchases, that has generated an annual compounding return of 17%. So this algorithm is very, very good at finding these locations. All we have done is searched for Victoria, okay, with an R score in the top 10 percentile between 550 and 700, and we have only got 19 suburbs returned. So if we were to do that same search, say for Queensland or WA, I would expect that we would get in that, 50 to 100 suburbs. So all of a sudden we can really quickly understand that we don't have a huge number of suburbs in Victoria that are really firing on all cylinders. And we can see here as well, really importantly, the data says one thing, but then when the data is looking good, we need to manually come in here as a property investment person, as a human, and subjectively consider this property. So we're doing qualitative and quantitative research. So this is applying the human touch, and we generally reject about 4 in every 5, 3 in every 4 suburbs because of low population, low density, changes in, overlays, floods, mining, different impacts there. We remove areas very liberally based on our local on the ground understanding. So you can see here, reject, 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 reject. We've got one suburb here that is approved, a second suburb here that is approved. So out of the entirety of Victoria, we only have 2 suburbs that have passed the qualitative and the quantitative assessments. So I'm now going to just filter those in here. Let's remove all of those that are rejected for us. So we've got those 2, and guess what? They are not in Melbourne. So one of them is East Bendigo, the other one is West Wodonga. So to answer your question, Naz, if we're taking a purely data-driven perspective, applying the same filters, expectations, requirements that we apply day to day in our national search, we are not getting any love from Melbourne itself. And so what I'm going to do is I'm actually going to go down the list a little bit further and see if there are some Melbourne suburbs that are coming in, maybe with an R score slightly more, general. Okay, so I've now reduced our requirement to 80%. And we are starting to see some suburbs coming in here in Melbourne. Okay, so we've got this property here, Junction Village. So this is in Cranbourne. So this is probably the first one that we would consider from a purely data perspective. But then when we come in here and start analysing this, so this is in the greater Melbourne area. When we come in here from a qualitative perspective, we have to get very critical of it. So you can see that they've got lines for new roads here without the houses. So that's a very quick sign that we can see that there's generally new supply coming into the area. And if they're subdividing this, then it's not to say over the next 10 years this whole suburb will be filled in. So, you've got a suburb next door with all of these roads marked out with no houses. So there's a lot of supply coming into this area. Those of you that know Melbourne, Cranbourne had a lot of houses built over the last 20 or so years. So the data is looking okay for these established dwellings in this area, but we know that there is a very high supply risk coming into this area. So that one we would rule out based on supply risk as our manual vetting process. Okay, so let's try and see if there's some other ones coming through here. So we've got this Clyde in the city of Casey. So this is in Melbourne. It's in the LGA of Casey. Let's go into this one. So this is the suburb area, the wider suburb area. We can see that there are a few houses here. The data is looking great for Clyde, but Clyde's made up of small lot buildings and then lots of mostly large acreages or rural type properties. So the variety of properties is very broad. And therefore compromised. So we can't really grab a valid single from that. Even though the overall data is looking good, the actual signal when you come in and analyse it manually is not reliable. So we would rule that out. Next one here, I don't think this is Melbourne overall. No, I'm not going to count that as Melbourne. Okay, and we can filter these by LGA if we require. We are really coming down here now. So where's this one? Wyndham. Tarneet. Beautiful. All right, so I've actually been looking at this one recently. So this is an interesting one. It's obviously a very broad residential area, a lot of larger land holdings that will be over some time to, subdivide. A lot of people land banking, through this region. But you do have a quite established block. So this is really essentially maybe 1, 2, 3, 4 suburbs in one, and you've got localized dynamics going on, but you do have some interesting causes and drivers of utilities sitting down here in the established block, and there's not really too much supply coming into this zone. This area is built out. So you're really treating this entire area, which continues right up to Bendigo, as another suburb, okay? And therefore, this area actually looks reasonable. So overall, this is not a recommendation or not. overall, I would be relatively comfortable with that suburb, but we are getting down to an 85% R score. On a national level, for me, that is not enough. I'm just going to zoom in a little bit here. Sorry, I did have this needing a microscope to see. So Tarneet, 650,000 purchase price, yield is 3.6%. When you're looking nationally at that price point, I'd be expecting a 5% yield. That's where I'm seeing the strongest opportunities at your price point there. 3.6%. Sol Delta, it has been increasing somewhat recently, but it's off a very low base. So it doesn't take much movement in the sold price there has been some quite strong movement already, which for me is not necessarily a positive thing. I'd prefer there to be a consistent or stable price recently. I don't want to be paying someone else's profits. Okay, days of supply. Actually, I'm just going to go back a step, guys. I've just got my columns mixed up. Prices are stable, okay? Our LGA proximity to utilities is excellent, very well serviced as an area. Days of supply is 26, which is very low nationally, and that has been decreasing. So we see a lot of tension, pressure building in this market from a supply side. Days of supply is a really interesting measure because it looks at demand and supply combines. So it's a very powerful number. And when we see that compressing so quickly, down to 26, we are in a very heated market that's set to potentially have some reasonable growth coming from it. Okay, some of the other metrics I'll look at, 68% owner-occupier levels, that's good, perfectly acceptable. We can even magnify that up by buying in the right streets. You need to know the street level information for that one. Rental prices are stable. Rental yields are increasing, which is very good. Overall, this suburb is performing quite well. All right, I am quite comfortable with it. Vacancy rates are a little high. And this is probably a story of the overall Victorian market. Okay, you've got pockets of good price performance, but the rental performance is very poor. And that's a function of COVID, 20,000 people leaving Melbourne per week through COVID, extremely, poor health in the rental market for some years, and you're seeing this slowly recovering. Still 2.9% vacancy rates in a very heated market with yields at only 3.6%. That's the story of Perth maybe 3 or 4 years ago, when it took almost a decade for the rental market to catch up and to recover. And then once it did, there was tightening in the rental market, and that caused the capital growth that we've seen in Perth for the last 2 years. So it's a similar story in Victoria. For me, in Victoria, we're still 18 months away from these markets being truly investable. But probably to answer your question, if you wanted to buy in Victoria, there are some areas, but you are compromising things at a national level. We're not quite there yet, Naz. Hopefully that analysis has been useful for you in trying to sort of piece that together.